Welcome to RTL Collective Calls. This is the first call in 2025, and welcome all y'all here. Hosting as always, Malika and myself, Ivan. Nothing has changed since last year, but yeah, as usual, we got three speakers today. Share their pitch deck and tell about the project, and then answer some questions. All the drill. So if it's your first collective call in 2025, let me remind you real quick how we do that. So for the pitch for the project that's pitching, you have like 5 minutes for the pitch part and roughly 10 minutes for the Q&A. And we'll also set the timer somewhere here and remind you when it's 1 minute until the time's left. If you have any questions, just feel free to post them in the chat, or just raise your hand and you'll be asked directly. And yeah, I see in the chat like a question here. How do we sign up the pitch? Yeah, later we will post a Google form, actually 2 Google forms. First, if you want to pitch here, you can sign up and book a call. And the second one is going to be a feedback form, but it's going to be later. Now, I think it's enough chit chat from me. And yeah, let's proceed with the first project. And I did not actually introduce them. So we got Altesh, founder and CEO at Insaaph Capital. And I guess you're going to be the first one, if you don't mind. Passing the mic to you, Altesh. Thanks for connecting.
Thanks so much, Ivan. Hello, everyone. Happy New Year. I hope that it's the best one yet for everyone, respectively. So yeah, and thank you for the opportunity for allowing me to have a chat with you guys. Okay, cool. So I'm the founder and CEO of Insaaph Capital. My co-founder was not able to join us, but I'll take you through what we are building, the traction that we have to date, and very happy to take on questions. So to start off with, I'm going to give you 2 statistics, basically. It's research that was compiled by the Bank of America, and it basically talks to the massive wealth transfer that's happening from the baby boomer generation to Generation X's, millennials, and Gen Z. So over the next 20 years, is roughly about 72 trillion that's going to be passed to the younger generations from baby boomers. But interestingly enough, what's also a really interesting study is that they find that 70% of wealthy families lost their wealth by the second generation and 90% by the third generation. And that speaks to a lack of advice, a lack of knowledge in terms of how to manage money and to preserve your wealth itself. And that's essentially speaks to the heart of the problem. The problem that we are trying to solve for is these next generation investors want seamless solutions to build globally diversified portfolios using on-demand investment advisory, but the issue is that they're forced to use outdated, expensive, and overly complicated solutions. What we're building is a globally discretionary investment management platform. On the left-hand side, essentially what you have is users, those guys that are basically receiving all of these assets. And on the right-hand side, we have a curated investment products. They tokenize, so essentially we're building on the blockchain, and we basically give these individuals access to the best investment products and savings products that we work with fund managers, private debt, VC and PE on the right-hand side itself. And in addition to that, what we do is we work with independent financial advisors to produce on-demand investment advisory, as opposed to every time you need to have a conversation from an investment advisory point of view. What differentiates us and what sets us apart? You find a lot of new platforms are either exchanges, so things like Luno, and then you have a lot of these guys that are they provide services where they just aggregate a whole lot of investment products. And essentially what we're trying to do is we do trading, we allow you to do trading, but there's an advisory, and we also do global payments. Because we're building on the blockchain, we enable you to transact globally in a very seamless way outside of the SWIFT system traditionally itself. So we're quite well differentiated. There's a lot of convergence in terms of how we're building. And whilst we're not exclusively an exchange, there's certain components that function like an exchange itself. Who are our target users? So I think it's kind of clear. What we're targeting is the global private wealth investor. The age bracket, we keep it really broad because we see it as a mindset. So we're looking at 25 to 65, albeit that Gen X, millennials, and Gen Z don't exactly fit. They're not 65 years old. But we think that in addition to Gen X, Gen Z, and millennials, if you have a mindset where you want to invest globally, you want to build a global portfolio of assets across different asset classes, we'll speak to you. But our core is definitely Gen Z, Gen X, and millennials itself. There's also opportunistically, what we're seeing is an opportunity to speak to institutional investors, especially institutional investors that want exposure to some of the products that we'll have on our platform that they don't currently have access to. Our go-to-market strategy, we've designed this very, very carefully to speak to two components. Number one, keep our cost per acquisition very, very low. And number two, where we actually enhance the lifetime value associated with our users itself. So two components, user acquisition and distribution. User acquisition, we work through partners, independent financial advisors, tech companies, and on distribution, our platform and our APIs and so on are built such that we have very seamless integration into traditional exchanges, centralized exchanges, and decentralized exchanges, which makes it very easy to distribute our products itself. And the independent financial advisor component actually speaks to the on-demand investment advisory. So, they essentially provide that on-demand investment advisory that we provide. Our business model and how we make money, we make money by facilitating transactions through market making. There's trading, there's liquidation fees, there's FX conversion fees. We have a traditional management fee structure that's like the 1.5% or 20% performance fees. And then we also take a percentage of the on-demand advisory fee that the advisors provide to charge our users itself. To date, our traction. So in 2024, we grew our user base 92%. We are post-revenue. So in 2023 versus 2022, we grew 48%. And in 2024 versus 2023, we grew 279%. The really cool thing is over the last 3 years, we've actually generated a compounded annual growth returns of 51% for our users. And this keeps our users very sticky, and they really like our platform for that reason itself. We launched in South Africa. We launched in South Africa, and we're preparing to actually enter Australia. And we believe that in our growth phase, our revenue potential is about 150 million. Both founders have very deep experience from a technical perspective, myself on the finance side and my co-founder on the tech side. And essentially what we're doing is we're raising a pre-seed bridging round of $150,000. And that's going to enable us to do the technology development, product development, and set up the legal infrastructure such that we can actually scale to an annual recurring revenue of $500,000 within the next 18 months. The goal is to be the easiest single destination to invest for next generation investors. Happy to take your questions.
Thank you, Altesh, for the pitch part. Now let's proceed to Q&A. As I said before, guys, feel free to post them in the chat. I already have a couple of them, or just raise your hand. But yeah, I'm gonna read the comments first anyway. So the first one goes like this: how do you balance the need for smooth user experiences with the compliance and licensing hustle in different countries? Great pitch, by the way.
Very good. Yeah, great question. So what we've done is, there's been a lot of uncertainty around crypto, and especially how do you regulate it versus traditional regulations. What we've done is we've taken an approach where we comply fully. So in South Africa, for example, we have a fund management license and a crypto asset service provider license. So our approach is we comply fully with traditional regulations and where there is crypto regulation such that there's no issues from a regulatory perspective. And in that regard, whether there are existing platforms that make it very seamless for users to comply with KYC and AML. So we're not skirting anything. We integrate with specialist providers from an AML KYC perspective, and the user experience is quite easy. So whether you come to us or whether you go to like a traditional exchange, the user experience is more simple. With us, we try to just make it as smooth as possible without being too complicated.
Thanks for answering that. We got another one. Which part of your strategy do you think sets you apart from the most from other investment platforms out there?
Yeah, so the fact that we are focused predominantly on the alternative investments, and especially in emerging markets. So two components. We focus on alternative investments. So we're tokenizing participation in VC, in private equity, private debt. That's really interesting for us. And some of our partners are leading players in South Africa as well as UAE. So our ecosystem, our partnerships, and what we're focusing on in terms of the asset classes that we're tokenizing first really does set us apart, because most of the other guys have either exclusively crypto or they've got just a plethora of investments and it's very difficult for the users. So I'll focus on alternative investments, our partnerships, and then the third component is we curate, right? So you're not going to come and see 1,000 products available to us. You're going to come and you're going to see the best products across each asset class available by our platform.
Okay, thanks for answering that as well. Another one goes from me. So could you tell us a bit more about your advisors, maybe partnerships? Do you have them so far?
Yeah, so our first jurisdiction was in South Africa. Our next jurisdiction is in Australia, and then we're targeting the UAE following that. So we look very carefully for regulation. We also look for independent financial advisor maturity in each of those markets. And each of those markets, the independent financial advisor community is quite big. In South Africa, there's a massive community of independent financial advisors, and they work with traditional asset managers and so on. So when we partner with them, which we have done in South Africa, and we'll do the same in Australia as well as in the UAE, essentially what we're giving them is access to customers that they can market their services to, and it becomes a win-win relationship. So yeah, for us, it's very important when we enter a market, independent financial advisors needs to be fairly established.
All right, perfect. Yeah, another one from me. So you've been in the game for a pretty long time, I guess, since the presentation I can tell it was from 2022, 2023. Yeah, and what actually inspired you to make such a project? What are your main inspirations that you want to pursue?
Yeah, so a bit of background. I mean, I was in fintech since about 2016. I started off in a business that was bank-backed, and they were a peer-to-peer/marketplace lending platform. And then I went into a regulated exchange. And my experience in those businesses, fractionalized lending, and we did a lot of work around legal work to make these things possible. When I was exposed to blockchain and what the capabilities of blockchain, it married my experience that I was getting and that unique skill set that I was developing in terms of legal foundations with blockchain. And we thought that, listen, it was really easy to basically utilize the blockchain and take the legal components and overlay it onto the blockchain and build a global platform from day one. So the idea was you're fulfilling a need. There's a real problem, but the technology in terms of advancements makes it easier to scale globally itself. So yeah, that was the inspiration behind it.
Oh, that's a great idea, especially if you can make this work out together and peacefully coexist. That's a cool way. Okay, guys, so do we have more questions? Malika, are you up to asking something?
Yeah, thanks. Altesh, and what's about existing investors? Do you already have any bookers?
Very good question. So yes, we do. So our very first investor was a company called Loyal VC. It's a global VC that's based out of Canada. They've got a global portfolio of about 400 investments. So they invested in us very early on. We then we graduated from 2 accelerators. The first one was Tatum's blockchain accelerator. That was in 2022, if I'm not mistaken. And then we just graduated from Startup Bootcamp in December. So they participated. And then there's a fairly prominent angel investor who's the CEO of a business called Flow 48. It's a venture-backed business. They're also a partner to us. They do private debt. And he's an early stage angel investor. Loyal VC has basically committed to our seed round. They've committed $200,000. They're willing to write a check of up to $200,000, and they'll continue to support us as we scale itself. So we've got a fairly good cap table at the moment, and we've got a lot of interest. In addition to that, we incorporated in the UK. We've got EIS assurance, which basically allows us to offer UK tax residents, angels, as well as VCs, a tax incentive for any investments that they make into Insaaph Capital. So in terms of capital access, we're really well positioned, and we want to do the bridging round now and then launch the seed round around April or May.
Thank you, Altesh. But that's all the time we got for the Q&A. It was a pleasure to hearing you out. Wish you best of luck with that.
Thank you.
Yeah, thanks for coming in. And yeah, we're moving on. We got a second project to pitch, and let me introduce it real quick. We got Liko, co-founder at the project called Karpous. So please go ahead, passing the mic to you. Thanks for coming.
Yes, hi. Thank you so much for your time. You guys can hear me well, right?
Yeah.
So pleased to meet you. My name is Liko. I am the co-founder for Karpous. All right. So basically, Karpous is an RWA marketplace where we connect investor with the RWA in the space. So basically, the goal for Karpous is to equalize the opportunity for people to invest, right? most of the people right now believes that that wealth management and asset management is only available for the rich. That's kind of like the flaw and the myth that people are being taught into. So with Karpous, we want to kind of like connect the user directly with the RWA. And we noticed that a trend in the RWA market that most of the people that are doing RWAs doing tokenization. While tokenization is very unique and very interesting, but then it poses a very huge regulatory concern. So we are taking the non-tokenized version or routes in order for us to offer RWA. Right now we have partners in the UAE, and basically there are three ways that people can actually invest in RWA, which is this number one, by using our marketplace where they buy the asset directly. So for example, one user purchased the asset directly, right? Or the second way to join is that they are going to our marketplace and then they are actually investing and creating a pool to share the asset with other people. The second way is that they are doing through our governance by staking our token, Karpous token. User can actually become a pool manager and open up the pool for the user publicly or privately, and then create a pool for their own. And this is going to be non-tokenized, right? And so the user, let's say the user doesn't opt for being a pool owner, but then the user is opting to become a normal user still. The user will have a mechanism in our Karpous DAO where they can vet the pool manager, the asset owner even, and then also they can actually propose an asset to be listing. So basically in the future, for now, the asset is being curated by our team, and it has to be well curated. And since we are based in the UAE, we are for now we are only onboarding the asset in the UAE, and then but then in the future, as we are already launching the token in a few months, then we will start the permissionless listing where user can actually propose for an asset that they own. We curate the asset, and then we kind of like launch it for the user to actually vote upon the asset. And if it's approved, then it's going to be listed on the platform. So most of the people doesn't really have a relationship with the asset directly. But then in our case, since we are kind of like the enabler and the connector for the RWA market and asset to the user, we hope to be able to bridge the usage for the asset itself into the user. So for example, in the assets, for example, that we are working with in the UAE, we are working for a way that we can use our token in the future for the user to purchase the service or use the asset with our token as a payment method. So that's kind of like what we are trying to do in terms of RWA. This is our token utilities in our ecosystem, in the marketplace, in the DAO, and also in the DePIN. So that's kind of like the short introduction regarding Karpous. Thank you so much.
Okay, thank you, Liko, for the pitch part. Now to Q&A. We got a little spare time to add to Q&A. So yeah, guys, feel free to address any question to Liko in the chat or just raise your hand. And just to remind you real quick that we post all the links and the Telegram handles, emails in the chat. So feel free to scroll up to actually find them and get connected. So yeah, to Q&A, guys, waiting for your questions.
Yeah, can I start, please?
Yeah,
thanks for the pitch, Liko. Based on what criteria did you choose countries for your market? Because I see that there is no Europe, right?
Yes, basically since we are operating on the Web 2 and the Web 3 basis, so there are two ways that we are onboarding our user. We are already operating in the Web 2 side. We are onboarding everybody except the United States, actually. We don't want to be scrutinized by the SEC. We want to be on the safe side. But then on the Web 3 side, in the pool manager side, where people are actually staking the tokens and then earning yields, basically those are, you can join from anywhere because we do not get your KYC. But then if you choose to become a pool manager or you choose to own the asset directly, then you have to pass our KYC. But then if you're just a user that stakes the token, wants to participate in the DAO governance, basically it's permissionless.
Okay, thanks. We got a question here in the chat. You are targeting regions with high inflation. How do you plan on winning people's trust over traditional banking or crypto alternatives?
Yes, so that's a very good idea. So on the background wise, I come from Indonesia and the inflation is amazing, so to say. So the if I can be very crude or very blunt, basically we are targeting the countries with conflicts, and not only conflicts but inflation, like Indonesia, Pakistan, Nigeria, Uganda, and stuff like that. So I went to Africa just 2 months ago, onboarding relationship managers. So we have been onboarding relationship managers for the past 3 months that we have been live in the Web2. Actually, we have been onboarding relationship managers that has experiences in bankings, that is working or have worked before in the banking space or as a banker right now. And we have onboarded like 3 or 4 of them just in Nigeria and I forgot the country name, the neighboring country of Uganda. But then regarding the trust, so basically we are not only leveraging our trust, our reputation, but then we are also leveraging the bankers' reputation. So in the Web2 space, we are actually using relationship managers as our bridge to the user, because they are our VIP. So we need a VIP treatment for them as well.
Okay, thanks. Hope it answers the question. We've got another one. Which upcoming feature or phase on your roadmap do you think will really make people go, wow, this changes everything?
For me personally, I think the governance will be the key turning point, because as of today, RWA is very unique, but then RWA is very tricky in terms of a lot of people are taking the tokenization route, because before we go the non-tokenization route to tokenize the assets that we are working with. But then after discussing with several legal firms, we actually decided that we don't want to tokenize anything, because it's very, the securities is very crazy and the regulations regarding that. So regarding the governance, when people are able already to start onboarding assets permissionlessly, recommending assets, approving assets, scoring the asset owner. So basically, let's say Malika, can I borrow your name? So let's say Malika is an asset owner and she listed an asset, but then apparently her asset doesn't provide a good return, or she doesn't act, she's late on the payments and stuff like that, right? The user can actually score her down, and the next time she is proposing another asset, people can actually review her trust. So basically, as a platform, we are only an enabler. The trust will be going back later on to the banker or to the asset owner directly. And let's say Ivan. Sorry, Ivan, since you're the host, let me borrow your name again. So basically, let's say Ivan, but he is always on time, always early. The asset is performing very well, and the user can actually vote him up, right? And then by doing the voting, so basically when he proposes new asset, it will give him credibility. So it will actually smoothen the listing processes as well. Of course, in the initial phase, we will have to vote and vet the user, KYB, KYC, for sure for the asset owner. But then once that's done, the first asset is listed, then the next one is going to be permissionless, and that's gonna be the interesting side.
Thanks. Yeah, interesting. We've got another one. How exactly do you guys skip the usual headaches of RWA tokenization? What's your secret sauce for staying compliant but still open to everyone?
Yes. So basically, there are several. We have been in discussion with several legal firms, be it from the Cayman Island, BVI, UAE, and stuff like that. Indonesia. Basically, the only thing that they are mentioning to us is that if you wanna do tokenization, you can forget about it unless you have a lot of money and a very huge backing. And normally speaking, if we are offering securities, we need to be regulated in the countries where we are operating. So let's say we are targeting Indonesian market, then we need to be operating in the Indonesian market. The only way that we actually be able to, that we are working actually to open this up more formally to the user is that by creating the pool and non-tokenizing the asset, basically the pool owner becomes the sole owner of the asset. And then we are actually applying for crowdfunding license, right, in the jurisdiction that we will be operating as a Web 2. And then the crowdfunding license will actually give us the kind of like enable us to create the pool on behalf of the user and on behalf of the company as well. So basically, instead of taking the tokenization license, we are taking the crowdfunding license or purchasing crowdfunding license that are already out in the market. That is owned by another company, and that's going to be much simpler. I'm not saying it's gonna be easy, but it's gonna be much simpler because it's not really a gray area like a tokenization because it's new, but it's already like an established market and an established guidelines for that.
And yeah, wish you best of luck in 2025, Liko. Thank you for coming. And yeah, we finish up with our last speaker. We got Charlie, a founder at BitLayer project. So please step in. Passing the mic to you. Thanks for coming, Charlie.
Thank you for inviting me. Can you hear me well? So my name is Charlie, co-founder of BitLayer. We've been building and being one of the largest and the fastest growing Bitcoin L2 ecosystem in the space since last April we launched. Great to see Inanna in the group. Yeah, we are not in. Today is not a call for fundraising per se. We are getting close to GE. We have over 170 investors from all over the world, over 40 different countries on the cap table. We have top KOLs like Coin Bureau, Crypto Banter also invest us. But today I want to kind of just be on the call just to share our journey. And probably this is my first online pitch in 2025. So why not take it? Again, for the people who want to work with us, this is kind of the we're definitely looking forward to explore all the synergies. So the vision of BitLayer is really just comes down to the fact we see the massive potential of Bitcoin DeFi to unlock the Bitcoin liquidity and provide this native Bitcoin L2 and adding this programmability features for other Bitcoin holders, and that's kind of the how we see it, the potential. The journey starts from Ordinal space in 2023. I was first week on Ordinal's kind of educating the space. I tap into pretty much all the Bitcoin primitive across the real set, ERC20, bitmaps and so on, being like a major whales and an educator in Asia in 2023. The more I tap into space, the more I feel like all the garbage UTXO on creating on-chain Bitcoin is not the end goal. And obviously that was like Bitcoin Core, like Luke and a bunch of people was a massive naysayer about that. So we were kind of trying to fix that. But obviously Bitcoin, doing anything with Bitcoin is always takes time. It's always kind of clunky. It's always kind of difficult with all the limitations, right? Bitcoin doesn't really have any programmability. All the Bitcoin sidechain attempt in the history kind of failed. And Vivian white paper came out last October, which was pretty exciting and interesting, using the Bitcoin existing opcode to really provide this kind of trust minimized bridge and Bitcoin verification possibilities. Obviously, there was some evolution. Now it's already Bitcoin BVM2, which is very interesting in a way to build this trust minimized bridge to lower down trust assumption from the multi-sig kind of majority honest approach to the one out of n trust assumption model. So where we are on Bitcoin L2 is a bunch of sidechains with multi-sig. That's kind of status quo. In the next couple of months, this project like BitLayer and a few other respected competitors, we're going to launch our Bitcoin Finality native Bitcoin L2. On economically, the main difference between sidechains and L2 is sidechain doesn't really contribute in security budget back to Bitcoin. So if you're miners, building whatever sidechain is basically a competitor. They're stealing the business out of the Bitcoin L1 to sidechains. And because there's no finality, there's no transaction verification on Bitcoin L1, there's no fees back to Bitcoin. So if you're miners, for anybody who you shouldn't really support sidechain. That's kind of where we are. So we believe Bitcoin need native layer 2, need the roll-up model. That's kind of the reason we designed this architect. The key components, as I mentioned, is trust minimized bridge and the Bitcoin verifier with the zk stock approach. So the key difference between us and other Bitcoin L2s is we managed to lower down the verification cost 10 times with the chunker and the zk stock approach without sacrificing security compared to the zk stock approach. And obviously that's kind of the things we're going to deliver. We launched the V2 testnet already 2 weeks ago. So far we've been testing, also opening up all kinds of auditing. The V2 mainnet we're going to launch in February. Once again, trust minimized bridge, real-time EVM, and Bitcoin security with native L2. That's kind of the key components we're delivering. So the roadmap, we are pretty much here. Launched the V2 mainnet. Our V1 mainnet, we hit pretty interesting, decent traction with big ecosystem already. I won't bore you too much about this. So just a lot already happened. We have over 280 projects in the ecosystem, mostly focused on DeFi. 24 million transactions already. We have around 1.2 million transactions and followers across different social media. Our Twitter is getting close to 1 million followers soon, especially the Binance Wallet campaign. We have the most successful, highest traction campaign with Binance Wallet in the history so far. Within 2 weeks, we have over 600 users participate already. We're expecting over 1.5 million users after the campaign, which we have another 4 weeks to go. We are one of the first Bitcoin L2 did the campaign with OKX Cryptopedia, which they brought around 650,000. We educate a lot of the people in the space about what is Bitcoin DeFi and Bitcoin ecosystem. We're the first Bitcoin L2 working with Chainlink CCIP. We managed to get integration for free, and also first with Nansen on the data and on-chain data analytical tools and so on. We're working with over 30 different partners on custody, institutions, and so on, especially Coinbase Prime. It's a 70 people team. Sure, we are finished soon. We raised 25 million led by Polychain, Franklin Templeton, participated by great investors like TBV and many others. Great, being very helpful, very supportive. 2024 was an amazing journey. Obviously, 2025, what matters is TGE with Ecosystem Fund and many other things. We want to support some major protocols, especially Franklin Templeton, their Benji money market fund. We want to integrate with them, and also working with all the other institutions. Bitcoin is going to make history in 2025 with many other institutional adoptions. So that's kind of where we are. So once again, for people who are building interesting protocols, we're EVM compatible. So deploying any DeFi protocol on us is the same experience as we're working with Arbitrum and so on. And we have over 800 million TVLs already. So we're supporting TVL and our liquidities and all kinds of go-to-market strategy for all kinds of use cases. Once again, today is not for the sake of fundraising, but we're still open for any NGO strategic investors who wants to join us last minute before TG. Yeah, that's pretty much it.
Yeah, thanks, Charlie, for the pitch. Now we go to Q&A part. Guys, feel free to leave your questions as well in the chat or raise your hand. And yeah, we already got one. So it goes like this. You're already at 850 million TVL. What's one big milestone you're most excited to hit next?
Technically, the V2, right? That's something will make us history. Bitcoin in the history hasn't really have the real native L2. In the past, all just meta protocols and sidechains. So that's the very important thing which moved the needle. Obviously, institutional adoption, we would argue this cycle is mainly driven by the Bitcoin ETF with over 100 billion purchasing pressure, right? Institutional adoption is very important. And this is the kind of the key important things in this cycle. With Franklin Templeton leading our round, we're talking to Fidelity, BlackRock, all 21 shares, a bunch of others. This is something which takes time, but once they move the needle, it's going to be strategic and a very big force. So we're talking to a lot of the asset management team across all these institutions, which we are very looking forward to have them on board.
All right, thanks for answering that. We got another one. It's concerning the team, and that's what I actually wanted to ask. But yeah, it goes like this. Your founding team has experience from Wobby, Polygon, and Polkadot. How does that blend of backgrounds give BitLayer its edge?
Well, I think across many other Bitcoin L2 or Bitcoin ecosystem projects, we're the ones actually successfully build ecosystem before with decent amount of traction. Polygon, Polkadot was over 10 billion kind of FDV with thousands of ecosystem projects on there. Hacko was the ecosystem chain among in in Huobi. Huobi was the biggest exchange in Asia in the back in days. They were the biggest exchange, have the OTC with all the Bitcoin miners. So that level of ecosystem building experiences is definitely much bigger than many other competitors. And in terms of engineering process, some of our engineering team actually worked for major corporates like IBM, Alibaba. So they know actually how to scale a very solid, robust system. We have very solid DeFi kind of researchers in the BD and DevRel team as well. At the end of the day, it's a team with a combination of good experiences and good connections across the institution and retail and the DeFi users. Yeah, and being first, right? Being first research team, deep dive on BitVM. BitLayer is official one of the member of the BitVM Alliance. We have contributing codes and the concept in the BitVM core community almost since day one. And obviously, we've been educating, outreach peering a lot of the non-Bitcoin builders to the space since 2024. So I think it's not about who you are, it's about what you do, right? It's about what you do and contributing the space. So I think we've been contributing quite a bit since we started the BitLayer journey, and we are continuing contributing in 2024 and 25 and 26, sorry.
Yeah, thanks for answering that, Charlie. We got a raise hand from Ileana. Please go ahead.
Hi, Charlie. Great pitch. Just really quick question on the kind of competitive landscape as well. I think there might be a question on this is, I think in terms of TVL, right, you guys are pretty much, league on its own. It's pretty much a top tier. Any new projects that you see that coming up in Bitcoin layer 2 that might be interesting, or like how you're thinking about, right? I think this is space everybody eyeing on, trying to lock because a lot of people's capital currently just sitting still in Bitcoin. How you think about some of the newcomers and how you'd be able to kind of unlock more of the capital and then kind of boost you over like $1 billion, which would be fantastic.
Yeah, first of all, it's not too many new ones actually, so it's been pretty underwhelming in the space. I would actually argue. When people are saying there's over 100 Bitcoin L2s, now it's less than 10 actually meaningful to really worth their attention. So that's first thing. We were number one DeFi Llama. We were number one for 3 months. Polkadot started this crazy incentive program, so they're number one. Shout out for them. They're giving away a lot of tokens for the liquidity providers, which we don't want to do that. I think there's 3 types of TVL. One is a fake TVL, which is not being used. So we shouldn't even consider that's real TVL. But some people kind of hack that in the DeFi Llama system. Second is called a real TVL, but not used, meaning they sit on some vaults doing nothing. It's not entered real protocol providing value as liquidity pool support and so on. The ones we want to really engage, actually cultivate is a real TVL actually being used on real use cases. That's the part that we trying to use all the ecosystem campaign with Binance, with OKX, all the others to, one, on the user side, bring user on board, let them have a taste of all the use cases, let them give rewards. So to bring the users, right, educate them how the user flow and so on, and answer the questions and so on. 2, on the supply side, to give feedback to the builders, right? Okay, these users have all kinds of feedback about this stuff, improve this and that. And this liquidity pool, we need to make it bigger on pools and so on, especially across stable coins. So you need to attract different type of liquidity provider. We support liquidity, but we have all kinds of expectations as well. At the end of the day, any liquidity, any TVL have the expectation, right? Different money have different price. Certain liquid provider have even over 15% hurdle rate, which is pretty high, right? For a lot of Bitcoin DeFi protocols, you can't really support that. We don't want to create another kind of Ponzi Luna kind of a 20% thing, which eventually crash, right? For Bitcoin ecosystem, the average yield people expecting is around 5% to 10. Some can even go slower. Because they don't actually protect their principles, so they're more risk averse. But at the end of the day, if there's like zero yield, why bother building DeFi on Bitcoin, right? So I think the sweet spot we are engaging the liquidity provider is whoever wants to accept to have around 3%, 10%. But obviously, the higher the yield people are looking for, the higher risk they're signing up for. So we want to be very transparent about that across all the liquid providers. It's not really about the biggest size matters. Size does matter, but actually it's about how sustainable those TVL can go, right? We see some competitors have massive TVL, a couple of billion. Some of them are just fake, and then they die down right after the TGE and so on. And a lot of the liquidity just sitting on some vaults doing nothing, which is useless. So we've been kind of back and forth arguing what does TVL as a metric really means as a reality, right? So as BitLayer, we try to be very real to ourselves and to other users and also builders. At the end of the day, it's about pitting this equilibrium of price and the yield. Yeah, so yeah, it's not a real answer. It's more like what happened in the space and how we are seeing the landscape. Yeah, so we will see how it goes. We are number 2 in the DeFi Llama. We will soon get over 1 billion TVL soon, but it's not a win. It's just the evolution above the ecosystem. Yeah.
Got it. Yeah, super helpful because I think one of the things really people looking at TVL, and I get really confused when I see sometimes there were 100 million, suddenly 1 billion, I'm like, what happened and stuff like that. So it's helpful to see actually a little bit more background context of what happened. So thank you.
Thank you, Liana, for the question, and Charlie for giving that, full answer, response. It was great. And we got 2 more questions, I believe. One from Azam, so let me go them real quick. Can you distinguish what is your key technical competitiveness?
Simply put, being the first research team on BitVM, having this approach of ZK stock, which is 10 times smaller on the proof size with same level of security. And we're EVM compatible, which is developer friendly to all the existing DeFi users, DeFi builders. And just check out our UI and have a look. Enough talking, show the code and deploy, see how it works. I think we try to not oversell because there's been way too much overclaim in the space. Just try the product. A lot of our competitors don't even have a mainnet. We have a mainnet up and running with 24 million transactions. No hacking, no crash, very few bugs, which we fix within a couple of hours. So check out bitlayer.org and check out the documentation and see how you want to have a look at our documentation.
Yeah, totally agree. Thanks for answering that. And the last one that we got time for today, how exactly are you merging... Sorry, that was my cat. Exactly, are you merging Bitcoin security with a real-time EVM? What's the secret sauce behind the cross-chain magic?
So it's not about it's not a cross-chain. It's about so there's 3 things. Bitcoin security is because of Bitcoin verification with native layer 2 on the verification side, right? The real-time VM, which is V3, kind of we are launching. We haven't done that yet. It's the long-term goal we want to achieve. Real-time VM, aka is parallel execution. It's a very important concept. Monad team came up 2 years ago, and now Mega East and a few other infrastructures team actually building on that as well. It's basically just another probably better, faster, higher throughput kind of a VM which we want to deliver. Right now we focus on EVM, which is battle tested. It's not the best technology in the world, but it's secure, it's sound, it's being used by thousands of protocols in the last 8 years, especially in the Ethereum ecosystem. So we start from that, but it's actually 3 different things kind of intertwined, but not necessarily the same thing. As I said, Bitcoin security is a Bitcoin verification. Real-time VM is another VM, which is scaling solution. The cross-chain, we're building by ourselves on the Bitcoin trust minimized bridge between Bitcoin L1 and all the other EVM chains, but we're not building the cross-chain solution like Chainlink CCIP did. That's the part we are working with them. We're the ones that actually integrating the Chainlink CCIP, layer 0 DVN, and many other third-party kind of bridging solution already. For the people who wants to bridge their liquidity from, let's say, Arbitron to BitLayer, there's over 10 different bridging solutions they can use. And of course, they can use our Fresh Bridge or official bridge as well. It's just become like a commodity. So different bridges have different trust assumption, risk assumption, and of course, different fees as well. So it's a free market for people to use whatever bridge they like. Yeah.
Okay, thank you, Charlie, for answering that. Unfortunately, that's all time we have today, but thank you for giving that, a full in detail response. It's a lot more clear for me now. And yeah, thanks for copying. Wish you the best of luck in 2025. And
thank you very much.
Yeah. And guys, thank you, Malika, for posting all the links that you guys can go on and fill in first the form for participation, because we've been asked first that how do you enroll and go here and pitch next. So yeah, there's a form for participation. Please consider that. And another one is feedback form. Feel free to leave your feedback. It means a lot to us to improve the user experience of our calls. And yeah, thanks for happening, for staying with us in 2025 and onwards. Wish you best of luck. Happy holidays if you have them. Malika, thanks for co-hosting. And yeah, see you next week.
Thanks, guys. Bye-bye. Have a great weekend.